The gold and silver crash and why it's the best thing that could have happened. Hello, everyone. My name is Rick Fronek. I'm the CEO and founder of Silver and Gold Solutions here in beautiful Galena, Illinois. And in today's Stacking Saturdays presentation, I'm going to share with you why, with what has happened here in the last few weeks, why it is actually the best thing that could have possibly happened to investors and people who are looking to save in the form of precious metals. Maybe you already been investing or saving over the last couple of years, or it's something that you're looking forward to getting into now because of everything that's been happening. But I'm going to share with you some great insight as to why the market crash that just happened recently, why it is actually going to be a jet propulsion for what's going to be happening here in the near future. So with today's presentation, I'm going to be going over a few things here. I only have one video. Typically, I share a couple of video clips from different sources of people that I follow throughout my presentation. But today, I'm just going to be sharing one from a company called SD Bullion, who I have in the past. As a disclaimer, I have in the past purchased from them, but it's somebody that, like I said before, this is the insight that I look for and share on these presentations every Saturday is stuff that's, behind the scenes that the mainstream media isn't, publicizing to people, that everybody should know what's going on. But unless you have a lot of time to dive into the, articles and videos, you won't be able to, get all the resources and necessary information you need to make a sound decision for yourself and your family in your future. So in today's presentation, I'm going to just touch base real quick on the Fed rate cut from the 29th, and then also a bigger picture that is not being mentioned at all by the mainstream media. Now, this is something that I did cover previously in a video. I'm just going to touch on that lightly, but then I'm also going to be talking about the Kazakhstan U.S. agreement, the silver and gold volatility and how it is the best thing. And then also I do have a huge announcement for everybody in this presentation. And then I also have a bonus huge announcement. And also I'm going to be talking about the opportunities ahead that everybody has for saving in the form of silver and gold. So what I like to do each week real quick is I'd like to do a recap of the gold silver ratio because it's important to understand the importance of that gold silver ratio. And so since we started our presentations back on June 21st, I took out a few of the dates, but every week I go over the gold silver ratio. And back when we first started, gold was at 33.69 and silver was at 36.02 an ounce. And here we are today at 4,001 and 80 cents per ounce for gold and 48.39 per ounce for silver. Now you look, we go back to when we had the market crash. Okay. So in this time frame here, even if you go back to October 18th to now, November 8th, you're seeing that, okay, yeah, the market did drop. Okay, we did hit those highs in the 44, touching briefly on the 4,500, that range for gold, and then also the highs for silver. But even if you look at now with where we were at starting back in June till now, even with the markets crashing in this area here, we see that we're still above 4,000 for gold, which is huge compared to 4 months ago, going almost 5 months ago, and then with silver being at 48.39, even after the crash. We're still looking at it. It's basically consolidating. It's kind of plateauing and leveling off, which is a very, very good sign. Okay, so right now with the gold silver ratio, basically that is if how many ounces of silver does it take to equal 1 ounce of gold? And right now with the current numbers at 4,001 and 48.39, it would take 82.7 ounces of silver to equal 1 ounce of gold. So even if you look back at when the markets were at the highest point for gold and silver, the ratio was at 81.48 or 81 and a half ounces of silver to gold. So it's not that much different. So even though we've gone through the tumultuous, the turmoil in the markets, and yet still, even after going through that, we're still in a very good position. This is for everybody who's, if you've invested in silver and gold and you've been saving in it for a while, you'll understand, you'll understand what I mean. But for somebody brand new getting into it, you probably heard that, oh, the gold and silver were hitting all-time highs and then the market crashed, and you're thinking, well, what's going on? Maybe I shouldn't do it. Well, this hopefully will put you at ease because we're not much further off than we were a couple weeks back. Okay. So what I want to do right now is this is an announcement I want to make. Okay, so I'm having a huge event. This coming Wednesday, November 12th. And also there's going to be an encore presentation on November 19th at 7:30 p.m. Central Standard Time each day. Now, in each of these events, I'm going to have a wealth strategy presentation. And I'm also going to be talking about a sound money wallet and how it can actually Make saving in the form of silver and gold easy to do and incrementally something that you can do with only a couple dollars at a time if you'd like. But then also, I'm going to be going kind of deep diving in between all these different gold and silver companies out there. All of them have their own benefits. I'm not saying if you buy from a specific company, by all means, if you're happy with their service and you've been buying from them for years, continue to do it. I'm not here to sway you away from doing that. What I want to do is I want to break it down and share with you between all the different companies out there, like the big name ones, like SD Bullion, for instance, and then goldsilver.com. That's another big one. I'm going to kind of do a comparison, a side-by-side comparison between all of these major gold and silver suppliers and show you the goods, the pros and the cons of each one. Okay, so this is going to be like an informational presentation. It'll help you give you a better overview of, who you might want to, if you're starting to save in silver and gold, who you might want to work with. And then also if you're currently doing it, maybe it'll shed some light on maybe there's a different opportunity with another company that will give you some additional insights. So that's on November 12th and 19th. I'll have this link below, the sngsolutions.org/2025 event. So we'll go ahead and click on that link. It'll take you to the landing page. It'll give you just a little bit of information about the presentation. But then also on each of those calls, I'm going to have a huge giveaway. Okay. So, and it's one of those things where I'm not going to record these events. Okay. So you have to be on the call in order to be eligible to win the prize on those events. So I guarantee you it's something that's going to be definitely worth your time. So I just wanted to make that announcement here before I dive into everything else. And then I do have a bonus huge announcement that I'm going to have a little bit here further along in the presentation. Okay, so be sure to follow, watch the video, get the insight, and then also on the other one I'm going to have. It's like I said, it's another huge announcement. Okay, so let's move forward here. So we're gonna talk real quick about the Fed rate cut on 10/29. So the Federal Reserve cut its benchmark interest rate by a quarter point October 29th, lowering the target range to 3.75% to 4%, its second reduction this year. The move aims to support a cooling labor market amid lingering inflation and uncertainty following the recent United States government shutdown. So the shutdown is actually playing a huge impact on what I'm going to be covering here today. And when I summarize everything all up with the opportunity involved, you'll understand how this all ties into everything. Fed Chair Jerome Powell said the decision reflects a balanced approach to sustaining growth while managing price stability, stressing that future rate cuts are not guaranteed. Opinions among policymakers were split. Some argued more easing was needed, while others saw no justification for any cut at all. And despite disagreement, the Fed maintained that economic activity is expanding moderately and inflation is trending closer to its 2% goal. Although some people say different, Powell emphasized that upcoming policy decisions will depend on economic data, signaling a cautious data-driven strategy rather than a shift toward aggressive rate reductions. So the next policy meeting is scheduled for December. So I think when I heard the announcement and what I've read about it since, my guess is if I had to make a guess, in my opinion, there's not going to be another rate reduction. If it is, it might be minimal, but I think that's kind of the way I'm interpreting everything that's going on. So, but what happens is when other countries are seeing what's happening with the Federal Reserve cuts, that plays an impact on the markets as well. So kind of keep that in mind, okay, as we're moving forward here. So I did want to touch on this now. I did a video a couple weeks back, so I highly encourage everybody to, if you haven't seen this video, to go back and watch it, because in the video I share a clip from Andy Schectman, and he's not only talking about the short term, what happened with the crash, what the real reason behind the crash was, okay, but not only is he talking about that, but he's also talking about what is happening and what pieces are being put into place for a huge overhaul next year. Okay, now it's something that if you are wondering what the long-term range of gold and silver is, I highly recommend that you go back and watch this video, because it is something that's going to really give you an eye-opening perspective on what is behind the scenes that is potentially set to happen by the middle of next year. Okay, so I encourage everybody to go back and watch that. I'll have the YouTube link below the video as well, so if you just want to click on that, you can easily access it. And then I do have it broken down into chapters. So if you want to go back and watch specific points of the whole of the video or watch the whole thing, I highly encourage you to do that. But if not, just look for the specific bullet points where I do cover what is being talked about moving forward. Okay, so I did want to point that out. So now, this is something that this is an article from Kitco News. Okay. Now, in this past week, you've heard a lot about the silver being added to the critical minerals, precious minerals list. We actually covered that on this channel back in September. At the beginning of September, I did a video in which I was sharing some information from Mike Maloney, who is another person that I highly recommend everybody to watch and follow if you have the time. But in this case here, so that's what's kind of all over Twitter and all over social media. You're seeing all these posts about, oh, it's a new thing. It's not a new thing. It's just now they're kind of making it, it's coming more to the forefront, especially about something else that I'll share with you here in a moment as well, too. But so in this article, he's talking, I'll have this link below as well. If you want to read the whole article, you can. There are growing bullish expectations as the precious metal has been officially added to the U.S. Geological Survey 2025 list of critical minerals. And that's, like I said, I have a note there that we did cover this before. So it's been already officially added, but for some reason, I guess they were slow for news for silver or something, so they decided to bring it up again now. Although silver is a precious metal and recognized as an important monetary asset, more than 60% of its demand comes from industrial applications. Growing industrial demand is a primary factor behind silver's ongoing and significant supply deficit. Analysts note that this new recognition could further complicate the silver market and its already fragile global supply chain. Robust industrial demand has created a substantial supply deficit in the silver market for the past 5 years, depleting above ground stockpiles to critically low levels. So keep this in mind because this is something where if you're wondering about your decision to move forward with silver as an option to save for your future, this is very important. Okay, so and the article continues where it says, um, Matthew Peugeot, hopefully I pronounced his name right, Peugeot, director of gold and silver at Metals Focus, said he expects this new designation to increase volatility in the silver market. So back in September, when it was initially came out, that's kind of added to the volatility of the market leading up to its highs. Okay, so I'm not sure about the context of, unless he's probably predicting again because they're bringing it up again, maybe they're trying to push the markets in that direction. So kind of keep that in mind as well also. So that's kind of like I said, seemed like it was kind of a slow week for silver news this past week. So maybe they're trying to spike, you know, I guess investors and people, a demand for silver again. So we'll see what happens in the coming week. There's definitely going to be far more tightness in the silver market. Peugeot explained that the volatility in silver will only ease once the supply issues are resolved, a process he said will not be easy. It'll only be rectified if we end up with surpluses in the silver market going forward. Certainly for this year, we're going to end up with another deficit. Okay, keep that in mind. Looking into next year, we'll see the same because we won't have significant industrial weakness to reduce silver consumption. I think how this balance turns around to a surplus will depend more on the price itself being a victim of its own success. So keep that in mind because if even through the end of this year and into next year, there's still going to be that deficit. So there's still going to be that demand. Okay. We could see elevated silver prices for the next 24 months, but it will all depend on the evolution of solar panel technology. So silver is this is kind of at the end of the bottom of the article. It says silver is one of 10 new metals added to the updated critical minerals list, alongside copper, metallurgical coal, potash, rhenium, silicon, and lead. So with what he's saying there, okay, so this is it, the guy Niels Christensen did the interview with Matthew Peugeot, and so he's still forecasting that silver is going to be rising. Okay, so there's still going to be that demand. So it's something that we're, like I said, it almost seems to me like they're trying to trigger the markets again to start surging upwards. Okay, so that's kind of was my take when I read this article and a couple of the other articles I've read online. It's kind of what I was thinking is they're just trying to spike the market, so to speak. Okay, so this is a clip I wanted to share with everybody. Okay, there's three short pieces from this video that I want to share. And I'll have the link below as well. Okay, so I'll have this link here. So if you want to watch the whole thing, you can. This is courtesy of SD Bullion's YouTube channel. So every week he does something similar to what SD Bullion does, something similar to what I do here. Except he's taking it from his sources. I'm taking it from many, many different sources and kind of combining into one thing. So it's kind of like almost similar to what he's doing. But in this video, he does talk about a couple things that I want to share that's kind of in line with why right now with the gold and silver markets crashing or what happened here in the past 3 weeks, why it's going to have an impact moving forward. So I'm going to share a couple clips here. And like I said before, this is live, so bear with me. Um, there we go.
Batteries, antibacterial medicines, inputs second only to oil, as well increasingly into store value investment demand ongoing.
Let's talk
Any
about
tariffs
silver.
on silver could wreak havoc on the metals markets because the U.S. relies heavily on imports to meet domestic demands. Remember, we on average import like 5 times the amounts of silver we internally mine to meet our ongoing silver demands internally here in the domestic United States. This news this week acknowledges silver's vulnerable supply chain real time. It could lead to enhanced government focus on securing domestic supply chains, support for enhancing permitting and mining and refining, subsidies, and strategic stockpiling initiatives for said metals. Someone better inform the COMEX silver register pile to stop shipping off domestic silver supplies and stockpiles for paltry sums of short-term profit taking, given higher London lease rates of late. Just a quick eyeball suggests that over 50 million ounces of silver have left COMEX's combined eligible and registered silver stockpiles this past London Silver Squeeze month of October 2025. Our friend Bruce over in Japan points out lease rates for all 3 critical precious metals we just mentioned, silver, platinum, and palladium, have all been spiking in London, signaling local shortages of bullion float to lend to end users over there this fall. Bruce also recently posted updated Chinese platinum import volumes through September of this year, 2025, which totals to about 40% of world year production already off to China through the first 3 quarters of this year, 2025. Keep it up, it'll be 55%. Again, platinum is a critical mineral we need here in the United States as well. Given the large drawbacks from Chinese silver warehouses of late, it's not surprising to see the news and reports that China is now considering limiting silver export rights in 2026 and 2027. Good luck, India, and good luck, London, if that does happen.
Yep.
Turning back to London, which saw such a drawdown of their silver float last month, that lease rates had to spike as high as 40% intraday and 200% overnight, according to reports of their opaque, non-public data. According to the LBMA's latest silver inventory update, they pulled some 53.8 million ounces into its thin float market recently this past month. Of course, buying some time, at least for now, and allowing the silver market to settle down of late. One major issue remains. More people and investors around the world learn and now know that silver demand is outstripping silver supply to the tune of market deficits now near 5 years running, around 800 million ounces guesstimates, with no forecasted end in sight. So this trade is still simple for myself. Spot prices must rise, or else we're going to keep seeing lease rates blow out in random shortages in various pockets throughout the bullion consuming world, again and again.
Okay, so I'm going to sure move it forward to another part of the video here in a second. He did mention that the comment about the tariffs. That was something that I did cover a couple months back as well, where there was the fear that the U.S. was going to have put tariffs on imports of silver into the United States. Okay, well, like he's sharing there in the video, if we actually import more silver than we mine here, why would we put a tariff on it? Okay, so kind of I don't think that's not an issue. I think that's more something that the media or different sources are trying to use to spike that fear of I guess the fear of not having enough silver on hand to supply regular for the medicinal and the actual industrial use for it, but then also for the people like the average everyday people like myself and you, where if there's going to be a shortage, we're not going to be able to get it. Okay, so kind of keep this in mind because with what he's saying with the imports, where he's mentioning how China is actually stockpiling platinum as well. So this is something that's China actually, even going back to when I was 25 years ago when I was a manager at a machine shop, and I would actually have to order materials and to do machining for our customers. China always had a control on the markets, whether it was copper, stainless, silver, brass. They usually were the driving factor between the price of those metals even back 25 years ago. So it's like a continuation. It's a constant thing where because of the way China they'll go from one metal to another, stockpiling it and putting a shortage or putting a squeeze, so to speak, a shortage on the rest of the world. So that drives the price up. Okay, so I'm gonna skip it forward here to uh, this is like a clip of an interview with another guy. This is on, I believe that it's from an India TV station. So watch this here. Okay.
The US government. There are just so many factors, Jeffrey, that are at play right now. So, looking at all of these, what is your sense on where is the gold price is going to end this year and a potential price range then for next year? We wouldn't be surprised to see $4,500 by the end of this year, possibly somewhat higher. Some point in 2026, we're expecting that the quarterly average price may average $5,000. When we think about when we make our price projections, we have short-term price projections, which are intraday or, this is where we think the price will be this month. But then when we start going longer term, we look at quarterly price projections out over the next 2 years. And then once we go beyond 2 years, we look at annual price projections. And so from a perspective of where we think the price of gold will be in 2026, we wouldn't be surprised to see the price approaching $5,000 on average. And you have to understand that average, right now, the price, we've gone through 10 months of 2025, and the average price is something like $3,600. So people will say, well, the gold price was $4,400 this year. Yeah, for a day or 2 days, actually. But, the average is much lower. So if we're saying that we think that the price could approach $5,000 on average next year, that suggests a range that has the gold price going significantly higher than $5,000. Jerry, before I let you go, I have to get in the silver.
Okay. So I'm going to skip it forward here a little bit. Okay, so that's really key right there is with what they're forecasting there because in what he made, I wanted to share that portion too because of the way he described the average price of gold. So, they could say, yeah, they can predict that gold might hit $6,000 next year, but yeah, it could. Nobody knows, obviously, but it could hit that. But what he's talking about is the average price per ounce for a quarter. Okay, so yeah, it could spike to that amount. But at the same time, he's still saying what his company and his firm are predicting as the average price per quarter, which is actually something to keep in mind as well, also because, obviously when we hit the highs now, we drop back down to around 4,000. That is a good sign, but people were like, well, no, that's a bad sign because it was higher. No, because we're looking at averages here. So I'm just going to take this other little clip is like less than a minute that I want to share, and then I have an article, and then we'll wrap things up with the special announcement as well. Okay.
But again, the major factor determining silver prices, like gold, as with gold, is investment demand, and investment demand is driven partly by expectations of tight silver supplies, but it's more importantly influenced by investors looking at the state of the world, the state of their own local financial banking system stability, the state of their own economy, the state of political security. And all of those factors are unsettling investors right now. We've seen a very sharp increase in investment demand for silver this year, last year, this year, and we expect a further sharp increase next year. So we're expecting silver prices to rise. I assume that as I said, I'd have to look at my reports to see what our most recent projection for the average price is.
Okay, because he didn't actually come out with an average price there that he was predicting, but he was saying, in the 50s. Okay. So I'll have this video below, the link for this video below this one as well in the comments section. So if you want to check out more about that video there. So let's get off of this. Oh my gosh. Um, okay, so I do want to point out something there. Okay, so if they're saying that the average price of, and here we go again, I want to touch base on again, this is so important, the gold silver ratio. So if he's saying that gold, they're predicting or their record or their data and what they're looking at is showing an average price of gold around $5,000 an ounce. And if you look at that gold silver ratio, typically the standard range for gold, the gold silver ratio is that it would be 40 or 60 ounces of silver to equal 1 ounce of gold. That's typically what the average has been. It's been as low as like, I believe, I think the lowest it's been is like maybe, I think 7 to 1 or 15 to 1 or something like that. But if silver is in context to gold, that gold silver ratio, if that does eventually pan out, which it should, that shows you where your investment areas can range. Whether you want to go with gold or you want to go with silver, your gains are going to be higher percentage wise in silver. Okay, so that's kind of why I wanted to point that out too, as well as far as with silver being even predicted into the 50s, that's still a very good sign for next year. Okay, so I did want to share this last clip here, and I think this maybe has to do with why they maybe brought up the um, silver being part of the critical minerals list, even though it is an element. But it's I did want to bring this up here because this is, I think, what maybe triggered that to be brought back up into the news. Okay, so Kazakhstan and the U.S. signed a MOU on critical minerals. Kazakhstan has signed a memorandum of understanding, that's what the MOU stands for, with the U.S. government in the field of critical minerals, the Central Asian country's presidential press service said on Thursday. This was last Thursday. The document was signed by, I'm not going to try and say their names, by the Ministry of Industry and Construction, U.S. Secretary of Commerce Howard Lutnick at a meeting in Washington earlier. Uh, Whoops, sorry. The rare earth opportunity. The MOU signed represents another key strategic move by the U.S. to secure prospective supplies of rare earths to chip away at China's dominance in the sector. Like I mentioned before, China drives a lot of the markets because of depending on what they're stockpiling and what they're not selling to other countries, and they're just stockpiling it because they're wanting to hoard it. And by all means, every country's got their own agenda and what they're trying to do, but that's what, China does have a huge impact on the markets worldwide. Kazakhstan, while still mostly underexplored to this day, may present an enticing opportunity. Earlier this year, the deputy chairman of its Ministry of Industry and Construction said the Central Asian nation has promising reserves of rare earth minerals, and if forecasts are confirmed, it could become one of the world's top 10 producers. This claim is backed by its discovery of the large Curitical, I'm not sure if I pronounced that right, deposit, which is estimated to contain 800,000 tons of rare earth metals. If confirmed, the deposit would place Kazakhstan behind only China and Brazil by reserve size. According to official geographic data, Kazakhstan currently has more than 980 deposits of solid minerals, and since 2018, it has issued 2,906 exploration licenses and 111 production licenses, but only in a dozen of the sites are ongoing exploration activity. So they have all this potential there, and they're just starting to get into it. So by the U.S. signing this agreement, um, this is something that our memorandum of understanding. This is good for the United States and it's good for Kazakhstan, but also it's good for the world because you don't want China or one country or two countries stockpiling everything and then holding the rest of the world in, I'm not sure what the right term would be, but holding the rest of the world at their mercy for selling them the minerals because then obviously that's kind of a monopoly, so to speak. Over the past 5 years, Kazakhstan has become a key hunting ground for miners, attracting about 1 billion in private investment into this sector. And this is this on in the article, and I'll also have this below the video as well too, if you want to read the full article. Tungsten ties. Okay, so tungsten is another precious mineral that's sought after. According to Bloomberg's report, Commerce Secretary Lutnick has been facilitating negotiations between Kov Kaz Capital Group and Kazakhstan's sovereign wealth fund about a bid to develop the deposits. Though no details have been finalized, a Chinese state-owned firm is also competing for the projects, it said. Okay, so right now it's the United States and China are basically competing for this project for tungsten. A prospective deal would deepen the U.S. economy, U.S. company's ties to Kazakhstan. Earlier this year, Cove has formed a joint venture with JSC Kaziology, Kazakhstan's National Geographic Exploration Company, for a rare earth project in the Kostani region. And I apologize if I'm murdering these names. The Trump administration also bolstered its ties to the Central Asian nation this year when the Commerce Department helped broker a $4.2 billion rail deal. So this is something it's not something that the mainstream media is talking about because I don't know. I just don't know why they don't talk about certain things like this. It's important to know because it's showing that whether you like President Trump or you don't, it doesn't matter to me. But he is trying to do something for long term, at least in this case here, with, between like what I'm sharing with this article, he's trying to create some long-term agreements with some of these other countries that's going to help the United States out. You might not see it in the next 2, 3, 4, 5 years, but down the road, it's going to benefit the United States. Okay, so he is trying to work. They are trying to work out different agreements with different countries. While the U.S. Geological Survey does not have Kazakhstan near the top of the world's top countries with recoverable deposits of tungsten, it is still estimated to have over 2 million tons of the mineral in reserve. The new mines would produce supply for 30 to 40 years, according to sources cited by Bloomberg. And currently, China accounts for more than 80% of global production of tungsten concentrate. Um, so if they have 80% right now, and they're also trying to bid on this to compete with the United States as far as um, getting this tungsten supply. That would pretty much put them as being the sole supplier of it, which would not be good. Okay, so real quick, and then I'll wrap everything up. Uh, so I want to just share. Okay, so the opportunity that's involved here is, I shared a video 2, 3 weeks back about how proof of 40% gains in gold and silver over a 30-day period. This goes back from, I think it was around October 21st is when I did the video. Yeah, October 21st. Um, so where I showed where if you had silver and gold in incremental amounts, you would have had 40% gains in that 30-day period, which was great. Okay, but that was right before the markets crashed. But what everybody needs to understand, I want to share this real quick. This is the gold charts, okay, going over 30 years. So when you go back to 1973, if we could turn back the clock and just, you know, dump a couple thousand into gold back then, a lot of us would be really, really well off right now. Okay, so this is all courtesy of goldprice.org. So it shows you what's happened here over the course of time, over from the 1970s, 80s, and there's a spike in the 80s when it hit some really nice all-time highs, but then it dropped back down. And then, here we go from 2011 through 2018. Here this is after in the COVID era right in here where it started going up. And then like Mike Maloney, and like I mentioned him before, Mike Maloney, is the first one that, came up with the cup and handle situation here with gold and also silver. So there's the big cup and there's the handle. Now here's the cup forming again. And then the handle is this leveling off, this consolidation that we're going through right now. So if you look at it here, this is in the past year. So if you had bought gold a year ago at 2,600 and you were still at 4,000, you've literally, you know, you, you couldn't have gone wrong. Okay, I'll just put it that way. But even now with it at right around 4,000, you're still at a $1,400 gain in the past year. Okay, no, nothing else across the board, no other commodity across the board has been able to do that. Okay, but when you see what's been happening here, watch, look at the charts. You can look this up as well also. But you see how consistent it is, whether it's consistently, you have your dips here and there, but it still keeps, hitting this. This is where it kind of leveled off and consolidated. And that's what everybody's like, well, I thought gold was going to go up to 4,000. It was consolidating, and then boom, it took off. So here we're going through another consolidation period, and that's something to kind of keep in mind moving forward. So while we're going through this consolidation period, that's a good sign because that means that the markets are preparing to, in this case here, based on with everything that I've been sharing over the last couple of weeks or a couple of months, and then also what I've been sharing in this video here, it's more than likely that the price is going to go up, even with a lot of what the experts are saying. So, but just kind of keep that in mind. And even in the downside, even if the markets don't spike and go up really high, you're still having a physical, tangible asset Whereas like your bank account where you're getting like maybe 1 or 2% interest at the very best, um, that's the bank has that money. If you had $100,000 in the bank and you went there and said, I want to take out $100,000, they probably would not be able to give it to you. With physical gold and silver, whether you're holding it or you're storing it somewhere, you have it or you can request delivery of it and it will be sent to you right away. Okay, so that's kind of something that also I'm going to be talking about in my presentations moving forward. But here I'm just going to go real quick over the silver price. So in 1995, this is a 30-year price. From 1995 till now, with the lowest being at $4.07, the highest being, when we did clip, I'm not sure why they have 53.98 because it did go higher than that. But with our recent close here, you're still over the long period of time, you look at the cup and the handle forming here. Here's the cup, here's the handle, and here's the cup forming again. So the handle is the next part, which is the leveling off or the consolidating of the price of silver. So, and this goes over this is a 30-day silver price. Oops, see if I can, whoops, hang on a minute. I thought I could move it, sorry. But you see, okay, even when we hit our highs right here, and it did drop down and okay, but like I showed you in this gold silver ratio at the beginning, over the last couple of weeks, even though after that crash, so to speak, we're still holding steady around $48. Okay, yeah, it dipped down just below $47. But what that offers everybody is an opportunity to take advantage of this for the price of gold and silver now, especially if you're new to the game or you're just getting started. This is something that it's very important to at least have the information. That's why I enjoy sharing this every week is because I want to share information that you might not have access to or you don't have time to look into. So hopefully condensing it down enough for you to get a good overall picture of the values of silver and gold and precious metals. And we're talking physical. We're not talking about paper contracts here, ETFs. We're talking about physical gold and silver. And the bottom line is the ETFs and the paper physical are I'm sorry, the paper silver and gold. That's what's ruined the markets because and what's creating the shortages is now all of a sudden because all these entities or these powers that be are companies, instead of just trading the paper ETF for a value for a profit, they're asking to take physical control of the gold or silver. And the LBMA and all these these different exchanges, they don't have it. If everybody who had an ETF requested their physical gold and silver, the markets would crash because there is not enough silver and gold to fill all those ETFs. Okay, so kind of keep that in mind. Okay, so that's where do want to make this one point because I always talk about Mike Maloney and his in a lot of his videos over the last couple of weeks. You know, this is an opportunity. You want to buy silver and gold low, okay, and obviously, and with it, if the markets kept going, you would not be, most people would not the average everyday person would not even consider buying gold or silver. Silver is like they say is a poor man's gold. And that's where you can leverage the lower price of silver right now for higher gains. And so that's what Mike Maloney's been saying. He's like, looks at this as an opportunity to buy more silver. So then when the price of the silver gold goes up and the gold silver ratio catches up to each other, then he converts the silver back into gold because he's made more profit with the silver and then purchases gold with it. Okay, so kind of keep that in mind as well. And so I'm going to close this up with this. Okay, so on November 26th, now this is important. This is you have to pay specific attention to the details of this contest, okay? So between now, November 8th and November 26th, I will have a video below this, a video link below this video, okay, in the comment section here on YouTube or Rumble. And it'll be called a WS presentation link, okay? That's exactly how it's going to be titled. What I want you to do is click on that link, and it's going to show you a wealth strategies presentation that's like 8.5 minutes long, maybe close to 9 minutes. And then after you watch that, I want you to send me an email with your full name, your real name. I don't want Codex or, um, you know, I don't know, Strawberry Junkie or something like that. Your YouTube name. I don't want that. I want your real name. That's the only way you're going to qualify for this because I've run contests before. I've actually had 3 contests where 2 people won memberships that I gave away, and another person won a half off a membership, but then also some physical silver. But because I don't have your email address, if you don't send me your full name and your email address, I have no way to contact you to remind you that you won the prize. So I have three people that have won our contests here in the past year that still haven't claimed them. Okay, so I apologize. It's like, and that's not fair to the people that actually are paying attention. So in order to qualify for this drawing, and I guarantee you, you will not want to, you do want to take part in this because it'll save you a lot of money and it'll give you a lot of money into your account as well. Okay, I'll just put it that way. So you watch the presentation, then send me your full real name, and because I have to have that, and then also your email address, just send me an email to rick@silverandgoldsolutions.org, and I will do a live drawing on the evening of November 26th. It's probably going to be like 6 p.m. Central Standard Time on that day. That way, depending on which side of the United States or the world you're on, you'll still be able to see it. And it's just my way of thanking everybody for, and paying it forward. I enjoy sharing this information. I learn a lot in the process too as I'm going through everything every week, but I enjoy sharing it with people, and hopefully I can make a difference in or impact in someone's life, and so that they can have a more safe and secure financial future for themselves and their families. So I want to thank you very much for taking time to watch this video. So I do have the huge announcement with the event, and there's going to be a giveaway on both of those days, the 12th and the 19th. And then also, like with this special drawing on Thanksgiving, the eve of Thanksgiving here in the United States, and with the holidays coming up, this would be a nice gift for yourself, or even if you want to give it to somebody else in your family, it would be something nice for that as well. So it's just my way of thanking everybody and letting you know that I do appreciate you. I do appreciate your time, and checking me out every Saturday. And like I said, with this one here, with this drawing here on the 26th, you do not need to be present, but make sure you watch the video, or at least, um, you know, subscribe and follow me on YouTube. That way, when that video does come out with the drawing and the announcement, you will be notified. It should pop up in your feed. But like I said, I just want to pay it forward, and just let everybody know that I do appreciate everything that you do and helping me be a better person as far as sharing this information and being able to help other people out with silver and gold and giving them some insight for their future. Okay. So thank you again, everybody, for your time. I will talk to everybody again soon, and have a great week ahead. And we'll see what happens with these, with the silver markets now that they mentioned this about the critical minerals list. We'll see if that gets the result they want with the spike in silver again. And if so, you give me your feedback below this video. And then also, I do want to say this: if you do watch this entire presentation real quick with this well strategy presentation link, if you do watch the video and you do take action, and you just don't want to wait to see if you're a winner in the drawing. If you do take action, I do, on the 26th, if your name is drawn, I will refund whichever membership package you purchase. But then also, I will, pardon me, I will send you this bonus here of a Silver and Gold Solutions coffee mug, and then also a 1 ounce copper coin because it's another rare precious metal, and then a 1 ounce silver Buffalo Indian head coin. Okay. So I hope everybody has a great week, and I will talk to everybody again soon. Take care. Bye.